Well, Gautam Trivedi joins us. Let's take our conversation forward. Let's understand what he makes of the current markets as a setup. Gautam, good to have you back. Thank you for joining us. We've had a
Morning.
good summer rally. 2023 has been, the summer rally of 2023 has been one of the most powerful rallies we've seen in a long, long time. Do you think we are done with the rally, or this rally has still some more legs left?
Yeah, I think to put things in perspective, it's important to understand that this is a global rally. It's not just a Asia or India rally, as much as a lot of people here seem to believe. We are only the fourth highest recipient of FPI flows in Asia year to date. So if you look at China northbound flows, we've seen about $28 billion. Korea's seen $13.3 billion of FPI flows, and Taiwan's $9 billion. So we are actually at 7.6, number 4 on the Asia Pacific list of FPI flows. That's one. The second thing to bear in mind is that the rally, when I say it's global, you've seen the German DAX, which is up 16%. That's a new lifetime high. The French CAC is near a lifetime high. The Nikkei is at a lifetime high. So I think this rally is a global phenomenon, not limited only to Asia. And I think this seems to have some more legs as of now. Now, specific to your question about India, my concern is, and I'm sometimes in the minority here, but my concern is that the valuation premium that we've got now is quite high. So we are now at MSCI India, calendar 24 is at 20 times. So that's CY24 PE. That's at a 60% premium to MSCI Asia ex Japan, where the median for the last 10 years has been 31%. In terms of premium to MSCI Asia ex Japan. So I think these are issues at the MSCI basket, but I think the rally in the mid caps has still legs and will continue. And also, of course, a positive fallout of Prime Minister Modi's visit to the US.
What to your mind could be the red light? Could it be valuation? Could it be supply? Could it be pure reversal in global markets? When would you say that, look, it's time to take some chips off the table now?
Yeah, I think that's a fair question, Nikunj. I think I just got back from the US. The one thing that I clearly did not see is any signs of a US slowdown or recession. So if the recession may happen later this year or early next year, so that's obviously clearly a threat. The probability by economists is still at as high as 65% of a US recession likely to happen. So that's one. I think the other issues that I see would be state elections. We've got some major state elections coming up. If for whatever reason the BJP doesn't fare or the NDA doesn't fare as well as market expectations, that could potentially be a bit of a dampener. And I guess the El Nino effect on the monsoon, and honestly, you and I both are not experts on this, but if that were to mess things up as far as agriculture is concerned, it does impact a whole swath of industries and businesses that are dependent on rural income. So yeah, I think these are the three things that I personally think could end up dampening the rally.
What about pure demand supply dynamics? IPOs have started, QIPs will start soon, then big IPOs will start, then big OFS will start, then anchor supply will start. I mean, it's a cycle, isn't it? If macros are okay, valuations are not that stretched, if liquidity is benign, then suddenly promoters will start to come out, anchor investors will come out. Isn't that a real risk?
You mean the risk of supply of paper? I don't know if that's necessarily at risk. It might, it's part of the evolution of the Indian equity markets and the ability of Indian companies to keep raising capital. And the market cap of our country, as you know, consistently has grown at 11%, 11 to 12% over the last decade in dollar terms. So I don't see that really being an issue. In fact, if you look at what's happened over the last about 10 days or so, bulk of the sell downs that we saw in terms of blocks of Indian companies got lapped up by a whole bunch of foreign institutional investors. Interestingly, most of these blocks got done in the block window, i.e. At a maximum discount of 1%. So that's the kind of demand that's out there for a lot of these mid-cap companies whose blocks got crossed over the last 10 days. So I don't see that really being an issue in terms of the supply.
Okay. You bought a lot into the niche consumption space, Indian hotels, landmarks. Some of these stocks have done very well for your clients and for you. Good call. But would you right to stay invested in this entire niche consumption theme for next couple of years?
We don't own Indian hotels. That's the one we missed, and we feel pretty bad about it. But Landmark Cards, I think, is a good example of being a classic urban play. We also own Sapphire Foods as another urban play. And I tell our investors that we really are seeing signs of two Indias. One, of course, being urban India, the other being the tier 3, tier 4, and the rest of India. And the fact is that you're still not seeing any significant slowdown in urban India. If you look at air traffic, if you look at the hotel industry, if you look at premium and luxury car sales. So that continues at a very strong pace. There might be a bit of a slowdown, but I still don't see any significant slowdown happening. So we're playing that through the urban consumption themes like a Landmark or a Sapphire Foods.
Landmark and Sapphire, these are the top consumption plays that you have. But I was also looking at the names of some of the financials that you hold. And please do correct me if I'm wrong, but I do see Axis Bank, HDFC Bank there, and IDFC First Bank. Your view specifically on IDFC First Bank, because now the street is getting worried that perhaps the prices have moved ahead of the fundamentals, and they're talking about select profit booking there.
So I think on IDFC First Bank, we own IDFC Limited, and we bought it as a sum of the parts play, given the fact that it was trading at a massive discount to IDFC, on a sum of the parts trading at a massive discount to IDFC First, of which it owns 40%. So point being that I think that trade actually has played out very well for us. And once the merger is consummated and we end up getting shares of IDFC First Bank, we'll take a call on what to do, whether we book profits or we continue holding shares of IDFC First Bank.
Okay, so that's about the financial space, but I'm intrigued to know what's your view as far as IT goes. You did hint about it in your first answer, but are you looking at it constructively now? Do you think the worst is priced in?
Here's the thing. It's a very good question. I don't have a good answer, unfortunately, because there's a lot of chatter about AI potentially in 2 to 3 years being able to replicate some of the stuff the Indian IT companies do. How will that evolve? How will that play out? How will investors price that in today or maybe in 6 months? I really don't have an answer to that. I think let's just wait for results of the IT companies, which will be out in the next 3 weeks. We'll get a better sense. But I think the one that we do own, which is Infosys, has been the worst hit of the IT pack. And, given valuations today where it is, maybe it's worth buying some. I don't know the answer, frankly. We're a little lost on the IT space.
What are you doing with your Infosys holdings? Sitting tight?
I'm sorry, can you repeat that?
What are you doing with your holdings in Infosys? Sitting tight?
We're sitting tight. It's a great company otherwise. Just that we timed it wrong. We bought it at the time when foreigners were selling IT, but the problem is the selling continued. We thought it had bottomed out. So if I look at this particular quarter, and we've got a week left, this week left for the quarter to end, but this quarter alone, foreign institutional investors have sold about $1.9 billion of Indian IT companies. So the selling still continues, unfortunately, and we're really confused on what to do with it.
Hi, Gautam. Morning. Wanted to also understand what the outlook is when it comes to the entire defense and railway space as a whole. Has there been anything that's caught your eye or anything that you all are looking to add to the portfolio?
Good question. And another area that we've actually sort of missed out on, we didn't see the rapid pace at which the indigenization would actually happen, because we'd heard this multiple times in the past with the previous governments. Never really happened. And now it's actually happening. So some of these stocks have run up a fair bit. A lot of them happen to be PSUs, and they have a bit of a monopolistic advantage, if you will. But the point is, will there be new companies emerging? There's, I believe, a drone company. We haven't looked at it, but I believe there's a drone company IPOing this week. So I think there'll be more opportunities coming through. And while we've missed out on the first move, we're certainly looking at that space for sure.
Gautam, we've seen record inflows into India.
Yeah.
Yet the haloed stocks like a Reliance, HDFC Bank, Infosys, large corporate banks, which are like the real go-to stocks when ETF allocation comes back to a country are underperforming. Why is this time the money which is coming back to India by global investors is not going into the traditional names and traditional stocks?
I think that's a fair observation, and who would have thought finally an ITC or a Mahindra or a Tata Motors would actually start performing, right? Frankly, in the past, when I've got calls from the sell side saying you should look at these stocks, I'm past as in the last 2 years, and I've unfortunately got those. But money should be coming back into the blue chip companies like a Reliance Industries or an HDFC Bank. I think it's a matter of time. But if you look at the amount of money that's come in this quarter again, BFSI stocks have taken in the bulk of it, about $3.5 billion of FPI flows. So I think it's a matter of time before that money comes back. Specific to Reliance, I think there's a lot of value unlocking that's still to happen, whether it is Geo Financial Services or Geo Platforms itself, whenever that ends up having a mega IPO. So I think that stock is clearly undervalued. It's been one of my favorite long-only plays in this market.
One big assumption, I think it's an easy assumption, is that interest rates have peaked out, at least locally.
Yeah.
If interest rates have peaked out, what could be the implications of that? Do you think growth stocks will come back? Do you think NBFCs will come back? Because that's like the biggest moving part in last 24 months for everybody.
Yeah, I think if you look at today's your very own newspaper, the Economic Times, talks about credit card debt being at a record high of some 2 lakh crores. So I think if interest rates indeed have peaked out, and I hope they have, it's going to benefit the whole country. I mean, across the board, not just retail lending, but even corporate lending, because I'm sure a lot of corporates have put off taking on new projects and putting on capex until they have clarity on interest rates. So I think it's gonna be positive for the whole country across the board, including CV sales. I mean, NBFCs, I think will do well for sure.
All right, Gautam, really appreciate your time. So glad you could join us. Really wonderful to have you on the show.